is the S&P 500 on the daily time frame. This is the daily chart here, and at the moment we are seeing a bearish divergence on the daily time frame. Price has been pushing to new highs, while the RSI has been trending lower, as we can see there, which is a classic divergence signal showing that momentum is weakening even as price extends higher. This tends to be an early warning that upside strength is fading and that a retracement or potential correction may be coming. So do keep in mind, team, a very, very key level that most bulls are watching for is that 610 level. I know at the moment this seems very unlikely, but I'm going to show you some charts, and I hope by the end of this session, it does give you some cautionary thought process heading into the upcoming weeks until these signals really resolve or mature. So SPY is also, like I said, stretched away from its 20 EMA line, which is the momentum gouge here, also known as the home base. The distance between price and the key moving averages here, especially the 20 EMA and the 200, like I said. So getting a correction anywhere towards the 610 level, which is the former historic all-time highs, that would be a great liquidity for the bulls there. When price stretches too far from these levels, like I said, we do tend to see a correction back down, and it's not a good area to be buying calls here or to be buying stocks that are very overbought. And as we can see, volume on Friday session did confirm, the low volume from the last 2 weeks has confirmed the loss of the bullish momentum that there was in the prior weeks there. And this is a good signal that we may be weakening here and a correction may be coming for the short term. So like I said, overall, the chart, the daily chart is signaling caution. The bearish divergence, stretched distance from the trend, and declining volume all point to the risk of downside developing in the near term, even if the price continues to grind slightly higher in the short term. Now, let's take a look at the SPY inverse here, team. This is the SPY inverse chart. So if we take a look at the SPY inverse chart here, we have been, keep in mind, team, this is the opposite of SPY, okay? This chart here is the opposite of SPY. So looking at this inverse chart here, we are placing a bullish divergence, as we can see, and we have been respecting this line very, very well. Every time we do test it, we have been solidifying it by printing these very, very small candles with little to no volume there. So this line has been solidified very well. And given that we have a bullish divergence on the SPY inverse chart, which is the opposite of SPY, now keep in mind, team, the reason why we look at this chart is because it's very hard for a lot of traders out there to comprehend the risk of the downside. Now, when we flip the chart and see the same bullish signals, that helps us with that bias. We're able to see the downside risk, but in a bullish visualization, if that makes sense. So this inverse chart is literally the opposite mirror of the actual SPY chart. As we can see, when I point my cursor higher, the number on SPY goes from 641, 640, 639, 638, and so forth. And the reason why is because, like I said, it's an inverse chart that really measures the downside risk, putting it into a bullish visualization. So we have a bullish divergence there, and I'll show you why this is so important. A bullish divergence is a powerful signal because it indicates that smart money may already be starting to hedge their position and load up while price is still going up. So This is what it's indicating here. So we'll take a look at an example of a bullish divergence here shortly. Team, give me one moment, please. So this is an example of a bullish divergence. As we can see, price is coming down while the RSI is printing a higher low structure. This is very important because when bulls do hold and a new high is placed anywhere between above 637, then this is going to trigger some heavy de-risking towards that gap at 622. Personally, I'm looking at 634 heading into this upcoming week. We are currently trading at 644, so 634 is an $11 drop. That is going to be my target heading into the end of this Friday. And heading into next week, if weakness does persist, then my target is going to be that gap fill at 621, where I expect the market to really start picking up on the momentum to the downside. So like I said, 634 is my first target. Now there's a gap at 635. There's a gap at 632 that potentially can get filled in the next 2 weeks. And yeah, this chart is looking like bulls are going to step in soon. Sorry, bears are going to step in soon. I would like to show you something else. When I was observing options this weekend, and I was looking at some positions that we could pick up as hedging positions for the team to offset longs. I was looking at this 600 put for SPY, and as we can see, volume has been rising on those contracts with traders loading up. We had 5,000 volume on Thursday, and then over 7,400 volume on Friday. So those contracts are getting loaded up and traders are hedging. Another indication of this hedge is seen through UVXY. As we can see, UVXY is a short-term. This is the daily chart for UVXY. And as we can see, we have a bullish divergence. The same way that we saw on the SPY inverse chart. So while price has continued to decline and printed fresh lows at 1334, the RSI is making higher lows. As we can see, this divergence signals that downside momentum is weakening and buyers may be quietly stepping up despite the decline that we're getting. They're basically loading up on positions and hedging their longs. Volume confirms this story as well. As we can see, volume has been greater than we saw in the prior weeks. So although UVXY has been trending down for weeks, there has been these bursts of accumulation. So I think very soon, sometime this week, we're going to start another spark the same way that we have seen every once in a while. So this one was very large, and this is because of the trade war, the whole trade war stuff that happened. We can see this went from 20 to 26. This went from 19 to 23. So almost 24. So this happens every time there's some sort of uncertainty or whenever the market gets very overbought. And I think this may hold a lot more weight than the other times. So definitely keep an eye out. Bulls can push towards 17.50 really fast on UVXY if the market does start to look weak. So like I said, the setup increases the probability of another volatility spike in the near term. Divergences like this on UVXY often precede sharp moves since volatility products react very violently once the market shifts, as we see potentially happening on SPY. So with SPY showing a bearish divergence and extended price action, UVXY's bullish divergence suggests the two charts may soon align, creating conditions for a fast spike in volatility. So for those of you that weren't here, let's take a look at the negative SPY one more time visually so that you see what this looks like on the SPY inverse chart to really put the downside risk into perspective within a bullish visualization here. All right, team. So now that you have a good, we have a good understanding of what we can expect heading into this week, which is mostly caution, chop, and do keep in mind, team, August and September historically are choppy. So do keep that in mind as well. Let's take a look at QQQ. QQQ is very, very overbought also, as we can see. And Friday did print a higher than usual average volume, sell volume, and this is happening at the top. So given that we are printing that bearish divergence there, I think QQQ is going to see some outflow, and the sector that is going to greatly benefit from the tech sector seeing outflow is XLV's healthcare. So as we can see, healthcare is getting very, very bullish here. I would like to show you another chart on another updated chart on XLV. So give me one moment here, team. XLV. So this is XLV, and as we can see, XLV is reacting to a very, very important level. We have been riding this bullish channel since 2011. This is when it was formed, and in mid 2011, further established, and by the end of starting 2012, we saw it confirmed, and in 2012, we saw a large 3-year rally that came to a pullback again in late 2020, towards early 2016. And so far, as we can see, this has been the norm. And finally, here we are in 2025, September 2025. We have retested that line again. And there's a great potential that we may see the XLV healthcare sector go into a 2 to 3 year bull market cycle within the next 2 to 3 years to come, or 2 to 4 years to really be conservative here. We're going to take a look at the stocks that are looking good here, that are discounted buys for this going into the long term. But first, I do want to reinforce our understanding on or our conviction why we believe QQQ may see a potential pullback here despite bulls placing a higher high there. The reason why is because if we take a look at NVIDIA here, NVIDIA is looking quite bearish. It is starting to lose its bullish channel there. And if this does sell off before earnings, it is possible that the overall chip industry within the tech sector can pull back as well. So if we take a look at the inverse chart, for those of you that aren't or that don't see this as being bearish yet, we can see that within the NVIDIA charts, inverse NVIDIA, and we can see that it has been trying, and eventually I think they're going to succeed. So one of these days, NVIDIA will probably open down 2 to 3%, maybe 4%, and yeah, so this would correct things, and I think the stock that's going to absorb some of those shares within the tech sector is going to be Apple. So although I am expecting outflow on the tech sector, there is a stock that I'm very, very bullish on, and that's Apple. If we take a look at Apple on the monthly time frame, we can see that it has been inside of this bullish channel ever since 2019, and we have confirmed it. We've established it, confirmed it, and at this point, you can see it's just very, very strong. Bulls have another reaction there. So even if this candle does sell off down to 226 for this month, for the month of August, heading into the upcoming month, Apple is a great dip buy opportunity on the tech stocks because it has a very likelihood of seeing the 300s probably within the next 2 to 4 years. One thing that Apple has, I think, is going to see the same way that we saw historically during Trump's administration is just absolute grinding higher and grinding higher and grinding higher. And I think based on the digestion cycles that we've gotten on Apple, it definitely has that. So especially if they do release any catalyst, any AI that replaces the terrible Siri that they have at the moment. Our team, we always make jokes about Siri. But yeah, Apple's a great dip buy, and you can buy the dip anywhere, anywhere above 220. I think it will be great. And let's take a look at the weekly chart, how we can put that into perspective. So if we take a look at the weekly chart, we have this massive demand candle there. So the demand candle can honestly defend all the way up to, all the way down to 218. Without feeling any pressure of the setup breaking down. So if we do see that on Apple, that is still a great opportunity to watch for the potential higher low to be placed, followed by another higher high towards the gap fill at 239. So if we go back to the daily time frame, we see that gap right there at 239, and there's a good potential that this gap is going to be filled on the higher high movement, and there's even a gap at 247 that can be filled. So any pullback that we get on Apple, or a good pullback on Apple, being patient on this trade can really pay if we go down to 224 again. In my opinion, considering this was a level of resistance and we have already established some demand in that wick there, there's a great chance that they can come down to 224, and they may even break down a little bit to 222, and then have basically a wick in this area coming all the way back up with some sort of bullish hammer, showing that there's great demand here, and this is going to be the higher low structure or the bullish flaggish formation for the 239 gap to be filled, and the other gap at 247. Now, before we move on, I would like to show you the inverse of Apple. So if we take a look at the inverse of Apple there, you can see it does tell us that there's a chance that there may be some profit taking with Apple coming back down to, let's say, 224 area and so forth, a retracement. Keep in mind, this is so that you guys don't get confused. This is the inverse Apple chart. Okay, so it's the Apple price mirrored upside down. So what I wanted to essentially show you is the weekly chart. So for those of you that are part of the mentorship, we studied this, we spent many classes on this, and I would like to show it to you again so that and others, so that you put this, you basically put what we have learned into practice. Now, this particular chart here, give me one moment, team. Let me just find the page here. I think it should be around. All right, there we go. So what I want to essentially show you here is this particular chart. If we take a look at this particular setup here, this is basically the formation of resistance in falling trend lines, meaning in declining prices. When we take a look at the Apple inverse chart, this is basically what we are seeing. We're seeing Apple failing that breakout there, the Apple inverse chart. Keep in mind, this is the Apple inverse chart, okay, team? So the Apple inverse chart failed to break the 200 lows, and you guys remember how strong Apple was when we were testing the 200 level. Very, very strong. And now we have this massive bearish supply bar, and this bearish supply bar is probably going to form a bear flag here and go all the way towards 260. So again, why are we saying 260 while this is going down? This is because we're looking at Apple inverse chart, okay? This is the opposite of Apple. We're looking at Apple in a in an inverse. So sorry, I know I keep repeating that, but I wanted to show you guys just how beautiful this setup is. Bearish supply bar just looks like we're going to head down towards 258, meaning Apple chart, the normal Apple chart, is going to be taking us towards 258 on this beautiful setup, on this beautiful rebound that we are getting here. Like I said, we have been inside of this bullet channel for some time, and it looks really, really great. So when the tech stocks do see pullbacks, they're going to move into Apple. Now, if we take a look at Microsoft, it looks nowhere near as strong as Apple at the moment. Microsoft is printing these bearish reversal bars, and it is indicating that it's gonna go on a pullback course within the upcoming weeks, where the rallies are going to get sold off, and price will not be sustainable in the short term at this current level. So be careful on Apple. On Microsoft. Weekly chart does not look good. The daily chart does give the notion that there may be a potential green session coming in soon, but even that, I don't think it'll be sustainable. Very likely, the next day or two, it might sell off again and continue to head lower until it hits a certain price area where there will be overwhelming demand. So we took a look at Microsoft, NVIDIA. Now let's talk about the stocks that are potentially going to have momentum. So I do have some stocks here. I think UNH, the same way that Apple saw a great upside when we got that news, that squeeze operation. Let's move on. Let's move to Apple chart here. If you guys remember on the weekly chart, Apple had a beautiful bullish engulfing there. So when we did form that bullish engulfing, we had another green follow through, and I'm expecting the same thing to happen on UNH here. If we go to the weekly chart, we have a beautiful, beautiful morning star 3-candle pattern reversal. Very, very strong, backed by volume on this weekly chart. And heading into the upcoming week, there's a great chance that UNH is going to test this resistance level at 326. So it is currently trading at 304. And we believe that it is going to make its way towards 326 next in the week, or 2 or 3 weeks ahead, but very likely going to do it this week. All right, so let's take a look at some other stocks. Now, I did see this particular stock, Molina Healthcare. This stock is trading at its 6-year lows there. Very, very important demand level, but the options are very, very expensive. So if you do want to pick up some shares of this stock to sell anywhere around the 200s, like I said, when we looked at XLV earlier, I told you that within the next 2 years, rotation is very likely going to flow into this particular sector because it is very, very oversold. And the way the rotation flows is very, very interesting. And based on my understanding over the years, I can tell you with confidence, this is a great opportunity here. We have a bullish engulfing on the weekly time frame, and there's a great chance that bulls are going to print a large green bar towards 140 by the end of this week, where stocks like MOH, UNH, and some others that we'll take a look at shortly are going to see some upside on. So XLV for the upcoming years, 2 to 4 years, we're looking at great rotation inflow for another expansion in the 180s to come. All right, team, looks really, really good. The setup looks great. As we can see, even the monthly time frame is this particular month's candle is countering the prior month's candle, which is the same exact mirrored candle there. So this is good to see, and I believe this particular sector is going to see more rotation inflow. So MOH, UNH, we're going to take a look at some other stocks. Now, this stock, let's take a look at this one. I do want to confirm if this is a healthcare. Yep, this is a healthcare stock as well. CNC. CNC has been showing up on my scanner this week. The stock is currently trading at 28.49 and also trading at a very, very major support level here, major demand level where there's a great chance we can see demand from the lack of demand that we have seen over the prior months of 2025. So in the entirety of 2025, we did not see any demand whatsoever on CNC. So now that we are at this level where we have come down 50% more, this is a great level. We are printing a nice bullish engulfing candle there. And bullish engulfing candles are specific candles that we look for during these reversal opportunities. So Let's take a look at an example of a bullish engulfing here. So the pin bars, bearish engulfing, bullish engulfing. So this is what a bullish engulfing looks like. It's a green candle that absorbs the prior week's red candle and triggers a reversal back up. It's a great candle reversal here, and if you want to trade it, you can set your entry there with your stop loss right there, and your profit target being at least 40% regain of the prior massive supply breakdown that we had. So anywhere at 40, I think that's a great target for that nice small risk to reward. So like I said, bullish engulfings are very strong reversal candles that we look for at these specific retests, and this is a great opportunity. All right, so we looked at UNH, we looked at CNC. There was another healthcare stock that I was watching. Oh, sorry, there it is. So Regen is another healthcare stock, and this particular stock here, this particular stock here, every time it has touched this long-term bullish uptrend line, we have triggered a reversal back up. So if I zoom in here, this is where it was formed. This is where it was established. So what do I mean by establishment phase? So the way that you draw a trend line is by connecting two data points. And the reason why you are doing that is so that you can catch the third and the fourth, because those two data points are the ones that you trade that really give you some great gains. So let's put this particular chart into example. We can see this is one test and that is two tests right there. So now that I have connected two tests, two data points, I'm going to extend my line all the way to the future so that I can catch the future tests as well. So you can see 4 months later, we came back down again, retested that level, printed a bullish engulfing there. This is the breakout that I trade to take advantage of this particular trend line move. So this is the way that I traded. And that would have provided, as we can see on the third test, a really great opportunity from 172 all the way to 309. So looking at this bigger picture trend line here on the monthly time frame, we can see that we have been establishing this, and we have confirmed this already. And the last time that we touched that trend line, the stock went on a major rally. And if this turns out to be the case here again, then I think this stock is very well worth watching and potentially positioning with a few shares. All I'm saying is a few shares will not hurt here on Regen for the years to come, for the next 3 to 4 years to come. If we do catch another one of these moves, that will be absolutely beautiful. So the stock has gone down from 1,211 all the way down to 475. And it is currently seeing buyers come in at the 500 area. It's currently at 580. I did alert it for our team around 500 lows. And I think it is great to enter shares here for the long term for the next 2 to 4 years. So like I said, if you are interested in buying some healthcare stocks that are very oversold, that are greatly discounted, on XLV sector, which is the healthcare sector of the S&P 500, then you have a great opportunity on these stocks that you can pick up and pretty much throw the keys away. So if you want, you could even set a stop loss at 474, or you could do 475. Yeah. But yeah, this is a great setup. If we go to the daily time frame here, also looks really great. It's been digesting well above the 20 EMA line. It's now creating this base rally there, and very likely than not, we're going to see another rally coming in here soon, where it takes us towards the next resistance around 668. The setup looks really good. I think 617 is the first target, but yeah, the setup looks really good, and it's well worth bringing it to your attention. All right, we took a look at Regen. There was another stock that I wanted to take a look at. Give me one moment, team, while I pull up XLV so that I can look at the other stock that I was watching for.
Hey, Bob,
XLV.
quick question for you.
Yes, sir.
This is Ryan. Thank you. for letting me jump in just for a second. With Regen, could there be a leap opportunity instead of a stock buy, or would you not suggest that?
I think so, Ryan. So the reason why I didn't particularly, by the way, really great talking to you. The reason why is because um, I thought it would be very expensive for our team, but it is actually one of my favorite healthcare stocks to be buying cheap leaps on it, where you buy it for about $500 or $1,000 on a large account, and then it turns into $10,000. It can really happen, and I have the historical data to back it. I have personally made great profits on this particular stock, and here's the thing with this. It's not going to have the volume that you would look for in regards to categorizing for which trades you're going, which contracts that you buy. But do keep in mind that you're only trading one or two contracts at the very max, so you don't really need much volume at all. You're easily going to be able to get in and out, especially on the days that you want to sell when the stock is up nice. So if we take a look at some leaps here, let's see what we can find. We want to find something that's fairly out of the money, but at the same time, um, it does look like it can gain significant value. I personally can't find anything at the moment that I would like. Maybe honestly, maybe the 780 call, but I would like to see the chart 780. Oh wow, that's actually not bad at all because it's this particular resistance right here. So 740 by buying something that's, let's say, a 780 strike, it will give it a lot of IV as we do get closer with so much time remaining. But let me just go over a few more expirations here if I can find something with good volume. Like I said, you're not going to find them with good volume, and they will have very large spreads, which is why I didn't recommend it to the team. But I do really like the idea of leaps on these particular stocks because, especially if you have a larger account, because based on uh, my experience, I have done pretty well. I've actually traded Regen a few times with the team where we have secured 30%. But I would look at this particular contract, June 18, 2026, at 770. Sorry, 770 call strike at 20.0. The bid and ask is very wide. We can see 16.0, 25.0, very wide. The mark is always the true price. So always look at the mark to see what the exact midpoint is, and that's 20.50. Honestly, to come back to your question, Ryan, after checking it out and seeing how low the volume is, I wouldn't trade it. I honestly would not buy the leaps. Instead, I would probably just focus on buying shares to keep it simple. Now, if you do want, you could do perhaps January 16, 2026. But the thing is, I honestly would like to find something in March. Yeah, I would honestly do. Yeah, the only chance you really have is January 16, 2026. That one has good volume, and you can take advantage of this. But it's not really a leap. It only has 152 days remaining before the expiration due date, but it's still doable. Still looks tradable, where you can make some nice profits as an options trader. But I would say pick up shares. I think it's much safer. You cut the interest rate part out where you get charged interests. That's what theta really is. You know, it's worse than interests, to be honest. It's like, yeah. So if you give yourself time, 2 to 4 years, I think you're going to do well on this stock. You're not going to be bounded by other factors that can reduce your probability of winning on this trade.
Thank you, buddy. Appreciate you.
Yes, sir. Now, team, I do want to find the stock that I was looking at for the. Oh, okay, there we go. Perfect. I figured it out which stocks they were. So, team, since I told you that healthcare is going to be good for the next 2 to 4 years, I would like to show you two stocks that I think are greatly discounted here. So, one of them is Humana HUM, and as we can see, This stock is very, very oversold, and it's currently sitting right at its 200 SMA line. And I think it was Charlie Munger that said it. The best opportunity for, for those that are well disciplined is waiting for stocks to retest their 200 SMA line on these bigger time frames and then buying them. So as we can see here, this is on the monthly time frame, and we're trading right at the 200 SMA line. So if this stock were to, let's say, rebound back up here and move back up to its historic all-time highs in the next 2 to 4 years to come, you're looking at over 100% profit on this trade. So I think that's or around 100%, obviously. I think it's a great opportunity to buy here. We're right at this major support line. As we can see, we have a nice demand reaction there. And there's still plenty of room. Despite the last 2 weeks of upside, there's still plenty of room on this stock to buy for the long term. So as we can see, monthly time frame looks really, really great. Daily time frame looks overbought, but like I said, the dip buys on this particular stock is going to be great. And I think the stock, although it shows that the stock is going to pull back, I think it'll be short-lived because the RSI is now above 70%. And what happens when we're in an uptrending market, meaning price is above the 200 SMA line and the 20 EMA, when the RSI is above 70%, that results in a melt-up operation. So 306 is probably going to be tested before we move down below 255. So I think anywhere from 266 to 270 is all a dip buy opportunity. So HUM long-term hold, I think it's a great stock to buy shares on, and give it 2 to 4 years, you're going to print. The other stock was MRK. So MRK, another healthcare stock here, is testing this smart money demand zone. So this base rally here, as we can see, this is a rally-based rally. And let's turn this green. So this is a rally-based rally, and now what's happened is we have sold all the way back down inside of that smart money demand zone, and we are printing this bullish engulfing candle that is going to see more upside in the months to come. So as we can see from the TTM squeeze, whenever we get this very oversold, this is like the breathe out, okay? This is like the breathe out, and now bulls are going to breathe in, and let's see how strong they're going to be in their when they have the ball. So now that bulls have the ball with this bullish engulfing, let's see how the upcoming months turn out here. So to show you what a smart money demand zone looks like for those of you that are in the learning process, we're going to take a look at that really fast. This is a good review for our mentorship students. This is what it looks like in visualization. We have a rally, we have a base, and then another rally, and then we go all the way back down inside of the demand zone, and we have a smart money concept, backtest buy signal strategy at the demand zone, starting with a bullish demand candle reversal inside of that zone. So we have the demand candle reversal there, bullish engulfing on the monthly time frame. So far, with half of the month still remaining, that can try and close stronger. That's what we hope for. But if it does close stronger for the rest of this month, in the upcoming months, these particular stocks are going to do really well. All right, so now that we have shared those two stocks for the team, let's go and cover another sector or another industry within the energy sector that is getting some rotation. So another industry that I have noticed a lot of rotation inflow is the energy sector. Clean energy. So we got FSLR here. FSLR, absolutely. First Solar printing this massive bullish demand candle with major volume there. And whenever we get those candles right at the 20 EMA line, this is indicating an expansion to come, where we expand away from the 20 EMA line, which is the momentum gouge, and then test a resistance level far from the 20 EMA and then start to correct back down. So the next target that we are watching for on FSLR is going to be 215. The stock printed a very strong demand candle on Friday session, backed by volume, and you can see the last time we got volume above the 20 EMA line, we got a massive spike. So this is looking really good. Another stock that I'm looking at within the clean energy is Enphase Energy. Now, I did alert that to our team on Friday's session. We picked up these contracts here. I picked up ENPH March 20, 2026 50 call at 3.20. And for larger accounts, we picked up June 18, 2026 50 call at 405. So the strikes are 50. And the reason why I chose that strike is because the stock is very, very overbought. And given how much time we have, I mean, June 18, 2026, that is a long time. That is almost about 11 I mean 10 to 12 months, plenty of time for this stock. This whole shaded area covers it towards the mid December, so it can go sideways for another 3 months and then go up afterwards, and we could still absolutely bank on this stock. That's how greatly durable that contract is. But it still would be really nice if we see a reversal above the 20 EMA line and we start to touch the 200 SMA line, which is the home base moving average that we have not touched for over a year. So very, very oversold stock. As we can see, the stock was once trading at 339. We do have this bullish divergence taking place for over a year now, where the stock is going down while the relative strength index is going up, showing that smart money is still loading up on this stock at these cheap prices. So I think this is a great trade to buy. We did get some volume coming in. So if we do start to really explode in the week or two, we are well positioned for this stock, ENPH. All right, team, now that we have covered ENPH, we also covered FSLR. Another stock, team, NEE, Nextera Energy. This stock is above the 200 SMA line, above the 20 EMA line. Again, very, very strong volume. We have a massive demand candle. It looks like we're creating this inverse head and shoulders. And once we do break this key resistance level, I think this stock can really start shooting up towards the gap fill at 82 and then 85. So keep your eyes out on NEE as well. It definitely looks good, you guys. It definitely looks good. Don't buy short term. Give yourself plenty of time. But if we do start to see a breakout in the upcoming week above 76.25, this stock can really start picking up on volume. Now, did we cover everything? All right, we did cover everything. There are two other stocks that I want to show you. These stocks are more farming stocks, and I think they're still going to be great for the future. The reason why is because with everything that Donald Trump is doing, he's trying to level the field with a lot of the other countries in regards to our what is the term we use when we have the opposite of surplus? I'm having a brain fart here, team. What is the opposite of a surplus? While you guys share it, I'll just go back and talk about the chart. Basically, I think there's going to be a lot more demand deficit. There we go. Thank you so much, Monique. So with a lot of the deficits that we had with other countries in regards to trade, there's been a shift with this administration, and it's going to change the dynamics, I think, on stocks like Deere and Co. and another stock that I'll show you. But Deere Co., despite going down on earnings, is printing a bullish engulfing. So if this stock does show some momentum heading into this upcoming week, it is trading right at the 200 SMA line. It is definitely overdue for a run. The weekly chart doesn't look as bullish, which is why I saved it for the last. I don't have too much confidence on it, but if somehow, some way, this candle does get engulfed in the upcoming month to come, and they get above 500s, I think it'll be well worth watching. So I will give us an update on this particular stock and TSCO in the upcoming months to come. But yeah, these stocks are looking really, really good. Tractor and Supply Co. This stock is looking good on the daily time frame, unlike Deere and Co., which was DE. TSCO is looking very, very bullish. The setup is great, and Ryan mentioned that he likes buying leap trades, and I think I did provide. I may have provided a good one for this particular stock that I think will be worth mentioning. This particular setup, Tusco on the monthly time frame has this three green soldiers setup. So every time you have a three green soldiers, as we can see, it's a very, very bullish signal. It can work. It can usually play out in two ways for the bulls. Either you get a massive green candle follow through in the fourth month, as we can see, or you'll see a digestion, some sort of consolidation that'll be short-term lived, and then a massive rally afterwards. So um, this particular contract, TSCO, June 18, 2026, 70 call at 2.70 premium. It has a wide spread, but is perfect for taking advantage of this move with 306 days before expiration due dates. Like I said, the spreads will tighten as price rallies and we get closer to expiration. This contract has plenty of time. It is quite cheap, 70 call at 2.70, and I think it can really benefit if we do get that massive expansion away from the 20 EMA, given that the stock has reacted positively to earnings. And yeah, that's my thoughts on TSCO. These were the stocks that I wanted to share. But most importantly, team, I do want to give you some caution heading into this upcoming week for the S&P 500. Like I said, we want to buy the dip on in the market, but at the moment, a lot of these stocks are very overbought and they need to pull back. But the one that we talked about, there's a great chance that, like I said, team, I don't know if you guys have also witnessed, but whenever healthcare is coming down, you got XLV stocks that are absolutely ripping with 2% higher. So I'll give you some stocks like ABBV is getting above the 70%. And you guys know this signal by now. You guys know this strategy. We have taught it in the mentorship program. When we do get above the 70% RSI, when we are in an uptrending market, that is not a short signal. That is a buy signal or a continuation signal, a continuity signal for a melt-up operation. So as we can see, that led to a massive melt-up operation when RSI got above 70%. Right here, same thing. We're getting above 70%. So expect some digestion like this to take place, followed by another leg higher towards the 220s. J&J, the same thing. This stock is now getting above the 70%, and the dips are going to continue to get bought on this particular stock, where it's going to continue to melt up higher. Looks like the RSI is also reaching 70% on the weekly time frame as well. Just very, very bullish overall. But yeah, team, that concludes my analysis for today. Now I'm going to go ahead and see what requests our team had. I didn't have much to share this week, but you guys know whenever we do get nice updates or whenever we do get a good grip on the market, we do keep you well updated. But for now, oh yes, I did forget to mention INTC. So INTC
Hey,
looks
Bad.
real. Hello? Yes.
Yeah. Did you see my thing about Tilray? Could you talk about that real quick?
TLRY?
Yes.
I haven't seen it, but let's take a look at now. By the way, neurosurgeon, I really miss you, man. I miss talking to you. I haven't seen you in the live trading session for a long time.
I know it, man. I've been really busy with work and stuff, and I finally got a chance to make the meeting today. I was like, I'm gonna ask him about that Tilray because I've been getting excited over it, and
Dude,
I got a
you
couple of
really enjoy the live
2027
trading right
calls.
now.
Yeah, I got the 2027s.
I see. That's good. You got plenty of time. Now with TLRY, this particular stock saw massive selling on this day, which was Thursday. And the reason why is because bulls had filled the gap there, and they had gotten to the point where we were very overbought from the 20 EMA line. Now, I do think this particular stock is going to continue to get dip bought, and once we do break 137, the next gap to fill is 177. The stock itself is very, very oversold despite this month's upside. Take a look at it, you guys. It is very, very, sorry about that, it's very oversold. So yeah, let's see. You can see this was a fake out. This was a fake out. These two monthly candles were a fake out. This was a fake out. And the reason why is because TLRY, to be more specific, marijuana stocks have not been able to go on a federal. And this administration, however, is making promises that they are going to, I forgot what the term was, but I guess make it, make it less offensive, if that makes sense. I hope you guys put it into your own words, but this is why we got into this trade, and this is why we continue to remain bullish on this particular stock. And where I think we're going to greatly benefit for the next 2 to 4 years on TLRY. And I'm so glad I got our team in here, in on it at these prices. I mean, we grabbed it at 0.78 and it went all the way to 137, and it's currently trading at 103. And I think it's going to continue to do well here. The setup looks absolutely amazing on all time frames, and it is very, very oversold. So heading into this upcoming week, I really would love to see buyers showing up again. Awesome, awesome, you guys. Let's see. UVXY shares or place a call option. Really up to you. However you prefer. You can pick up a UVXY call if you would prefer. But yeah, shares are a great tool for traders. By the way, team, do keep in mind, you do not want to keep UVXY, VIX, SQQQ shares long term. You do not make that mistake, okay? This is a short-term opportunity where you just get in and out. It's a few night stand and that's it. There's no commitment to this particular stock. So please do keep that in mind, okay, team? You trade it when uncertainty or whenever price action is very, very overbought, and you begin to see smart money positioning into it like we see now, and you get out once you see that spike taking place. You don't say, oh, let's see if we can go higher. No, just take profits on that spike, and if anything, buy the dip again if the market still shows continued weakness. But yeah, that's my thoughts on UVXY. Now, in regards to shares, it's honestly up to, in regards to call options, it's honestly up to you. But I do recommend it. Now, team, if we take a look at SOX this particular sector also, this ETF, not sector. This is an ETF. It is the semiconductor bear ETF, and the leverage bear ETF. And if we take a look at it, it's starting to see some buyers. And the reason why is because investors and traders are starting to hedge their positions against these very overbought levels on the chip stock. So if we take a look at Soxel, to be honest with you though, Dali, I guess you can short it. But I just don't have the confidence. I don't really have the confidence, but it honestly does look good. It really does look good. As we can see, Soxel looks like it's going to come down to at least 22.69. So it might be good. It might be good to short, given that the chip industry should see some pullback before NVIDIA earnings. So I'm thinking at least 170 or even the gap fill at 167 before we see more upside heading into earnings. AI, BBY, NKE, JM, NKE looks really, really good, by the way. I've been watching NKE, and despite the market weakening, NKE looks like it wants to break this resistance level at 79.92 and really trigger a breakout higher. The TTM squeeze has reset, which means there's a lot of fuel on this particular stock. So it's definitely well worth watching this one. Now, BBY, let's take a look at BBY. BBY has earnings, but I am watching it for the long term. We have this nice candle on the monthly time frame that could if it gets above 74, that will be very, very bullish. If you followed last week, team, I said BBY was good to trade heading into that week. So we said based on how BBY closed for the week, we would be trading that opportunity as a day trade or a swing trade for that particular week. Here it is, another stock to trade call options for next week. Looks like an easy target towards the 20 EMA line, which was right here, and you can see that played out really well. So let's say you bought BBY at 67.80, it went to 72.70. So that was a really good trade for that week if you did trade it on a week-to-week basis off of that bullish engulfing reversal. So now that we have traded it, my personal thoughts, I think we should stay neutral and let earnings show us what's going to happen. Now, another stock that we talked about last week was Google. We said Google targeting 207 in this upcoming week. Looks like an easy reach target based on this week's candle close. Would like to see our chat room traders talking about this for next week when trading tech. And if you take a look at Google, this stock also played out really well, touched that 207 level that we talked about. So if you traded it for that upcoming week, you took it from 198 towards 207. So you bought the dip at 198 and you traded, you had a really nice trade. I'm going to continue doing that. And I know that I didn't post any for this particular week. I think I only posted INTC. Good thing that I remembered INTC. But I am going to do that a lot more often for the upcoming weeks. INTC, this trade looks really, really great. Although we're trading it with a long-term call option, it is still technically a trade for this week. So eyes on INTC here for next week. Badass setup. The catalyst is U.S. announcing taking a stake in INTC. They're announcing discussions of taking a stake in INTC. This is a major confidence boost for long-term outlook. I'm buying to open INTC January 15, 2027, 30 call at 4.15 premium. Now, this contract expires in 517 days. And the setup is really, really good. I mean, take a look at the volume, look at the TTM squeeze. It just looks so badass. It hasn't fired the squeeze yet. And you can see the last time something like that happened, we had a nice squeeze operation towards the 200 SMA line. So I would like to see that. And I think we have plenty of time with that 2027 expiration. So for those of you that want to buy this contract, you can buy it into Monday session and hold it for long term.